Our next guest thinks there will still be 2 rate cuts this year. Joining us at Post 9 is Darrell Cronk, Wells Fargo CIO for Wealth and Investment Management, target of 5,200. It's great to have you in D.C. I noticed the regional bank ETF is up 1.5%, and I'm wondering if you think someone's trying to sniff out Powell not going uber hawkish today.
Well, that might be. I don't think Powell can go uber hawkish. There's just no way. I mean, he's not going to fight the fact that the markets have walked back the 6-to-1 rate cut. He's going to let that stand. He's going to say basically that inflation's made progress, but the progress is uneven, right? And we need to be more data dependent and keep going. I think the small bank index, there's a huge bifurcation you guys have been talking about all morning between, the high-end consumer, the low-end consumer, services and goods, big company confidence, small company confidence, and big banks and small banks, right? The small banks are really struggling right now, and so I'm not sure that they're a great play off of the Fed, to be candid.
Meantime, there's wealth effect at play, whether you're in the stock market, whether you have a ton of home equity or not, or mortgage free or not, right? Other big delineation.
Yeah,
Consumer.
I think that's the narrative. People keep trying to figure out the consumer, figure out the economy, and what they're missing here is just that complete bifurcation of the economy, right? The high end, the low end, that I just talked about. What's interesting is if you buy into the fact that the consumer and small business are the engine of the U.S. economy, right? So take the Conference Board consumer confidence number, 21-month low, right? We know because, mortgage rates are higher, payments are higher. If you look at the low-end consumer, the last 3 years, Carl, their non-mortgage payments, right, what they're paying in cash flow out of pocket is up 70%. 70 is a real number, right? That hits them hard. You couple that with small business optimism from NFIB, right, which is below the average now for 27 months and in the 4th percentile, right? It's really low. So small business optimism is low. Consumer optimism is low and declining, right? So we have to watch that because that is the engine of the economy, to your point.
Meantime, the pullback we've had after a near 30% gain for 5 months, still reasonable to you?
Still reasonable.
When do you think, what's the real test?
So it's interesting, the last few days, we've taken the 20-day moving average and pierced the now starting to downward slope 50-day moving average from above, right? Which is never a good sign when that happens, right? So there's probably some very short-term pressure at play, right? And when that happens, there's a lot of blue sky between the 50-day and the 200-day that we've got to go down to. To us, it looks like you could see a correction down to that 4,800 level, 4,750, 4,850, somewhere in that range, which would be a material nice correction. We're exactly 6 months in. Remember, we started this rally November 1. It's now May 1. Exactly 6 months into this strong rally. It probably is time to take a little of that pressure off, particularly with what the dollar's doing and rates are doing and everything else.
I was just going to say, is the key determinant here of where the market goes next, both stocks and bonds, just what the inflation reads are going to look like, and making sure that we start to see some progress on disinflation.
So you nailed it, right, Sarah? Because here's the thing, right? The enemy of the markets right now is inflation, right? So what's going to push inflation down or continue the deflation? I think it's the labor market, right? If we would see the unemployment rate start to rise, people would normally say, oh, that's bad for the economy. It won't be. It will be actually good for markets because they'll believe that that's going to be disinflationary and start to bring that number down. And so we think that, as the labor market softens, which we think you're seeing some of that, right? You just saw it in the JOLTS number. ADP was a little stronger. We think the non-farm payroll on Friday will be down at the headline number. But watch wages and watch that unemployment rate, right? Those are the two things I think that will fixate on how inflation's path goes from here. And remember, we're going to fade in the second half of this year some of the housing pressure we got last year. So that will put some disinflationary pressure down too.